Hello and welcome to another edition of Stockwatch. So as we get into the back end of the trading week, we hear that Facebook are entering the field of the pay-per-view industry as they are planning to turn their live online events product into actual pay-per-views that consumers can purchase themselves. It's a feature Facebook says that will help businesses, including sports companies, make more money in a changing consumer environment. And obviously they're not doing this out of the goodness of their hearts, obviously. They're looking at a 28% revenue, or early predictions are looking at a 28% revenue jump when this all gets formalized and licensed. So, it's a changing feature and a changing market for this social media giant. Since its launch last August, Facebook said paid online events are available in 44 markets globally, and of course including the US. So in its earnings report last month, Facebook had actually reported almost 2 billion active daily users for its platform. So hence Facebook has a built-in audience to make this function work. So very, very significant, and we'll see, just quite, if revenues and price jumps will happen in the stock when new features do happen to a company. Is it going to be a good thing or not? And Twitter has launched a new tip jar. I just wanted to kind of just touch on this. It happened a few sessions ago, but it hasn't really been progressively doing anything to the stock price at the moment, which we'll take a look at shortly. The company says the feature is an easy way to support the incredible voices that make up the conversation on their platforms. So we'll see how well it's going to act on that. It's already been criticized for giving email addresses to other people. Or having access to personal email addresses. So we'll see if there's any other criticisms coming their way in the near future. So just looking on Facebook at the moment with the assistance of the Ichimoku indicator. So I'm just looking at the fact that we have dropped a bit, this daily candlestick from yesterday's session. It's precariously hovering above the top border of the Ichimoku cloud, but nothing to suggest in the way at the moment that it's really going to start falling lower. We've had a slight bullish divergence here, as you can see, with the lower lows and higher highs. So, you have to think to yourself that the bias is actually on the upside at the moment. But if we look at the intraday chart, what we want to see for bulls especially is for this breakout of the Ichimoku cloud. We've got engulfment at the moment. The top border is very, very precarious to be hit at the moment. It's just hovering and flirting with that spike there. So we'll just have to wait and see when the session opens if we're going to get that momentum to the upside that can propel back to these previous highs above the $330 mark. If we do have a bit of an escape from the Ichimoku indicator, the cloud, then I'll be expecting, bias to be on the upside, momentum to be on the upside, and then I'll see what the opportunities are on the RSI or momentum indicators, but I'll be definitely putting a buy position in there as it is quite clear. Twitter, on the other hand, I just want to bring it down and just point out that, we had, even though we had good earnings report for Twitter in Q1, the analysts didn't like the direction that Twitter said it was going to go in Q2. Expects expenses to rise and, an employee headcount to increase as well. So that's why we saw this detrimental downturn. And we've actually seen more of a downturn, as you can see, in the last few trading sessions. So as I said, most analysts cut their price targets, had a bit of a sell-off. They didn't really like the news coming out of Twitter, even though it had very good potential Q1 results. Now, again, we're just looking at to see if there's going to be any jumps in prices. If I just bring it down to the intraday chart, again, very, very bearish in the near term at least. Just trying to see any signs of life on the RSI. We've got this slight divergence here, which is actually bearish. So, we are looking to see that prices will start being weighed down a little bit more. If this happens, we're looking at previous lows as targets, especially sell positions down to the mid $40 range. So this is what I'll be looking at in the near term, as you can see, the conversion and baseline of the Ichimoku indicator are really pushing prices down. There's a nice confluence happening here, as you can see, with both indicator lines. So I'll just be looking to see which one of those breaks, and then we'll have an upside or downside bias even further to put in some good strong positions to make a little bit of profits. That's just something to look out for in the next few trading sessions as we head into the back end of the trading weeks. That's all from Stockwatch today. Thank you very much for joining me. If you have any comments or queries, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.